And now let's turn our attention back to the commodity markets. Manisha is now joining in. Manisha, what are you looking at?
Well, all-time highs that the precious metals seem to be trading at is something that we'll need to talk about because gold is now trading at $4,600 an ounce. We have seen prices gain up by 4% in the previous week. And when you look at 2025, as we've been discussing, it had gained 64%. So the rally really started in the 2023 in the month of September. But from the 1st of January to where we're trading right now, gold prices have given you 140% returns. If you look at overall demand, apart from the geopolitics and macros as well, the estimates are that for 2026, the demand for gold globally could hit 4850 tons. Now, this is the highest since 2011. So we seem to be making records in various directions there. Take a look at the silver prices. 4% of gains is what we started Asian markets with. Last 1 year has seen 182% of gains come in for the silver prices. And this year, so far, we already have done 17% of gains there. Support clearly coming in from the weaker than expected US payrolls data. Markets were anticipating a 66,000 of a number. What we got on screen was 50,000. That has led to a decline in the US dollar index, supportive for precious metal prices. The street also estimates that with the kind of jobs numbers that we are looking at, you could be looking at least 2 rate cuts in the year 2026, and that in turn also has been supportive for the prices there. Also, it has been about safe haven buying. The US-Venezuela tensions has been supportive for gold prices in sense of tangible buying there. And then there is also unrest in Iran intensifying. That has been supportive for global gold demand. The dollar index declining as a criminal investigation on the Fed chief, Jeremy Powell, puts Fed independence into question, has been one of the reasons that we've seen a lot of safe haven come in for the tangible commodities. So when you look at what the markets will watch out now for, is in focus is the U.S. inflation data, and the key bank earnings this week is what the markets will take cues from. In the meanwhile, you also have, over the last 2 or 3 days, seen more reports coming from the international banks. UBS, for now, has changed its estimate for the gold prices. And this year, they believe that $5,000 an ounce is a possibility by the month of March. HSBC, in the meanwhile, also says that the first half of 2026 could see $5,000 an ounce for the gold prices. Last split should come in on your screens, which shows you on what we've done in sense of commodities for 2026 till time. So gold price is already up 6%. Silver outperforming yet another year until time, at least 17% of gains coming in for this one. Copper, we've seen all-time highs in the previous week, and we've seen 5% of gains already for this year. Crude prices, 3 years of decline. This year has started positive, 4% higher. Aluminum is gained 5%, and platinum continues to be in that race as well, 15% up already in 2026 for that one too.
Okay, all right. Thanks a lot for that, Manisha.